Well, shadow banking is basically in China a bank without acting like a bank. In the US, shadow banking was a lot of retirement funds sloshing around and caused a financial crisis. China's different. They're basically banks, but they don't have the regulations and they're trying to get around the banking system. It's gone from 5% of GDP to 40% of GDP in just 5 years, and it could be even higher at this point, depending on you count it.
At what point does it become dangerous, do you think, from a systemic level?
Well, there's two real problems. First of all, it's helped to inflate the property bubble in China, which I think is going to crash pretty badly at some point in the near future. Second of all, in the last year or two, shadow banking has helped to prop up a lot of the smaller banks. They're using it to fund up their asset base. And if you get the systemic risk would be that some of the smaller banks actually collapse.
The real problem trying to work out the timing on this is just the opacity of policy making at the central government level. I mean, we've recently had another round where I think the regulators have tried to beef themselves up to tackle the wealth management product market, which is just another expression, I think, of this credit boom that's taken place here. So do you have any good feel for when the lights on the dashboard go from yellow to red and then we go overload?
They can't go from yellow to red. The top people keep saying, oh, we got to rein in this credit. But when you get down in the trenches, the banks are saying, no, we want to keep lending. Local governments desperately need the money to keep their fiscal tax base going. And a lot of ailing corporations, like all these terrible steel companies that are producing steel that nobody needs, they also need the credit. So basically, the system is all designed to push against Beijing and say, you're not going to stop the game. The game's going to keep going.
Why is this the feather on top, the single strand of straw on the back of the camel's back that's going to burst the system? Because I've heard debt stories and concerns about overall debt to GDP, about municipal debt, about obviously the shadow banking as well, as you're graphically illustrating time and time again. And at the moment, the market has no interest in this story. Market, you know what? Everything's awesome, soft landing, no problem. Why is this the key component?
Well, the main reason is that shadow banking is very short-term stuff. I mean, you go to a person and you say, look, you give me, $10 million, I'll put up a building. The lender says, sure, I'll give you the money, but I want it back in 3 months. So the minute there's a lack of confidence in this part of the financial system, that money is just going to evaporate. And a lot of property developers, local governments, and banks are going to suddenly find themselves strapped.
You say that the Chinese government doesn't really understand this as well. What can they do to learn very quickly? Because one thing that I think they do watch other markets, and then they try and learn. They made all kinds of mistakes on the stock market collapse originally, but they learn from those lessons, and they do tend to do that. So how quickly can they do something about this?
Well, the People's Bank of China is very smart, and they know what's going on, and probably the China Banking Regulatory Commission, which regulates the banks. The problem is, at the end of the day, you've got to say to yourself, okay, there's a lot of credit out there. We got to get nervous about this. How are we going to control it? And the senior people are sort of like, well, the economy's doing fine. Let's just keep going.